In this video, we'll continue where we left off. So we did all the journal entries from January 1 all the way up to January 23rd. And so now in this video, we're going to finish the journal entries from the 24th all the way to the January 30th before we get to adjusting entries. All right. So ABC provided services to another customer and received cash, right? So when you see provide services, that's service revenue. When you have service revenue, that is going to be a credit. In most cases, you're going to be crediting service revenue. So ABC provided services to a customer and received cash. Cash is a debit because it's going up. So we're going to debit cash and we're going to credit service revenue. So I'm going to put in here, debit to cash, credit to service revenue. And the amount is going to be $92,000. So I'm going to put in $92,000 here on the debit side, $92,000 on the credit side. And I go down and I post. You cannot forget this step. Debit for 92, and I go down to service revenue. And service revenue is going to have the 92,000. All right? Let's look at the next one. The customer from January 10th made a partial payment for ABC services. So let's look at January 10th. So January 10th, you had a customer who you see debit to accounts receivable, credit to service revenue. You did work for the customer didn't pay you. Now the customer is paying you $73,000, right? So the customer from January 10th pays you $73,000. So what are you receiving? You are receiving cash, okay? So you've got cash here that you're receiving. Cash is going up. Okay, so what's coming down? Well, if you look at the entry on the 10th, you debited accounts receivable. Your accounts receivable right now has a balance of $212,000. If you receive $73,000, this accounts receivable should not have a balance of 212. It should be 212 minus the 73. So that's going to be our credit. We're crediting accounts receivable. We're not crediting service revenue again because you're not doing more work. You're just getting paid for the work that you already done. Right? So I'm going to debit cash for the amount of money received, and I'm going to credit accounts receivable. And so here we have 73,000. So I'm going to debit 73,000 and credit 73,000. All right? So that's my debit to cash and my credit to accounts receivable. I go down. Here's my cash, debit for 73,000. Here's my credit for 73,000. All right. So let's look at the next one. ABC had depreciation on the building for January. Okay, so why don't we'll do the three, January 30th, January 30th, and January 30th. We'll do these three entries together because it's the same, right? Whenever you have depreciation, you're going to debit depreciation expense and you're going to credit accumulated depreciation for the type of depreciation account. You're going to learn more about this later, but it's pretty much the same entry. Debit depreciation, credit accumulated depreciation for $800. For the building, debit depreciation, credit accumulated depreciation for the furniture and fixtures for the $500. Debit depreciation and credit accumulated depreciation for the equipment. So we're going to do those together. I'll just put it in here. Those three entries we'll do together. All right? So you'll see debit depreciation expense, administrative, depreciation expense, administrative, depreciation expense, administrative, and I have accumulated depreciation building, accumulated depreciation furniture and fixtures, accumulated depreciation equipment. And what are the amounts? So for my building, it's $800. For my furniture and fixtures, it's $500. And for my equipment, it's $1,500. So $800, $500, and $1,500. Right? 800, 500, 1,500. And now I post them. So I go and I post these to the general ledger. And so I'm going to go, I'll do the expense first. So this is depreciation expense. So you'll see the 800, the 500, the 1,500. I could have combined all of this together and just did one entry for a debit, but I didn't do that, and that's fine. And then I'm going to go to my accumulated depreciation account up here, and I'm going to have an adjustment for each one of those, right? So accumulated depreciation building is my credit for 800. Accumulated depreciation furniture and fixtures is my credit for 500. Accumulated depreciation equipment is my credit for 1,500. All right? So those are the three entries that we did. All right, let's look at the other one. So ABC paid monthly salary to its sales employees of $22,000. ABC paid monthly salaries to its administrative employees. So we'll actually do these two together as well because it's the same entry. It's just two different types of employees. One is your sales employees and the other one is your administrative employees, and you're paying them. So if you paid it, you paid with cash. So we're going to credit cash in both instances, and that means your employees did work for you. So the company received work services from its employees. So the best account for that is going to be salaries expense. Again, when a company receives services, that's an expense for the company. So it's going to be salaries expense or salaries and wages expense, or sometimes you'll see wages expense. Really doesn't matter what you call it. But in these two entries, you're going to have a debit to the salary expense selling. One is salaries expense administrative, and you're going to have a credit to cash. So if we look here, the salaries to the sales employees was $22,000. So this one is going to be $22,000. And cash, $22,000. And then the salaries expense to the administrative employees was $14,000. And so $14,000 here and $14,000 here. So I go down and I post that. So if we look at cash, you'll see the $22,000 credit, the $14,000 credit. And now I go down to my expenses, okay? And you will see the salaries expense selling for $22,000, the salaries expense administrative for $14,000. I have my cells linked, but yours don't automatically populate. You're gonna actually have to go in and do that. So right, so that's my debit, that's my debit. All right, let's look at the others. So it says ABC company paid income taxes with cash. So I'm going to, if I pay with cash, I'm going to credit cash. Cash is going down. Well, what am I going to debit? Well, it was income taxes, right? So what's the best account for income taxes? It's going to be income tax expense, which is not listed here, but that's the account that we're going to use. So I'm going to debit income tax expense, and I'm going to credit cash, and I'm going to do that for $9,000. So I'm going to put in $9,000 here, and I'm going to put in $9,000 here. All right, and again, I got to post this. So here's my credit to cash for $9,000, and I'm going to go all the way down to income tax expense, and here it is, my debit for $9,000. Okay, the final entry before we end this video is going to be you paid cash dividends. So again, the same thing. I'm paying with cash. Cash is an asset. Cash is going down, so I'm going to credit cash. And what am I debiting? I'm debiting dividends because dividends is going up. Whenever you pay or issue dividends, you increase dividends. So that's my debit to dividends. So I'm going to debit dividends, and I'm going to credit cash for $26,000. So I'm going to put in here $26,000 and $26,000. Okay, and then I go down. Here's my credit to cash for 26, and I go look for dividends, which is going to be in the equity section. Here's my dividends, which is $26,000. All right, so now I've posted those entries, and when I come back, I will finish these 5 entries, and these are the adjusting entries.